Good morning, everyone. Good afternoon or good night, good evening, wherever you are in this part of the world. This is Meherban Faroogh and Dime Wiggins from 1000 Pip Club with our usual Wednesday class, currency analysis class. So we have a trade plan, and from Mark Knight. Mark, thanks again for doing this. And I'm hoping this is helping you significantly. I'm seeing. I think this is your second trade plan. And I understand you've been trading for some time, but nonetheless, I'm hoping that by you sending in these plans and whatever feedback we give you, it helps you. And if so, then let me know, and then kind of you can go from there. Okay, good. Right, thanks. Okay, so Dime has posted the link for forexstreet.net. Dime, I think that's the. I'm not sure. I think you posted the link for fxstreet.com for the webinars. That's great, but I may have missed. But if you can post the link for forexstreet.net, which is, and kind of also make sure you're on the group, on the relevant group, 1000 Pip Club. So when you click on that link, guys, you'll go into. In fact, you know what? Before I start, I might as well show it because it's, I think, helpful. You would go in to type in, I'll type a new link here so you guys understand. forexstreet.net, this one. You go there. No worries to me. And once you're there, this is different than fxstreet.com. It's the same company. It's owned by fxstreet.com, but this is basically where you get groups and whatnot. So if you go into groups, and then there's a bunch of them, you can sort it by most active or whatnot. And you're looking for this logo, 1000 Pip Club Live Currency Analysis Class. So click on 1000 Pip Club Live Currency Analysis Class, and if you scroll down, if you have thoughts, whatever, you can post it here. But if you have trade plan, I would request look for Mark's photo, but look for trade plans. Go there and post a trade plan. You would basically type out here whatever, and there's a little attachment that I can't see right now for some reason, but there's a little attachment that you can, yep, there is upload files. You can upload the file, and so you can check out what Mark Knight, or I think Charles has also, yep, Charles has done. So if you scroll all the way down, you'll see Mark's recent trade plan on the pound, US dollar, and grab that one, and or you can follow me along, because on my right I have his trade plan up here, and you can always go back and check it later. But I would strongly recommend you check it out, and again, avail this opportunity of submitting your trade plans in class. So Mark, I'm also keeping an eye on the chat on the side. So if you have any questions or suggestions or whatever as I go along, if I'm not picking up things properly, then feel free to type it out. Okay. Before I go, there's a little question here from Durando. See lots of lines. What are these on the chart? So these lines essentially are support. There's only two things, Durando. These are support resistance lines and fib lines. And I've said this many times before. I have it across all the. If you go into snapshots, I have it for all the 28 pairs actually, plus equities, oil, silver, whatnot, gold. The idea is I don't want to wake up in the morning or when I'm trading the Asian session, the US session, if a pair hits a certain number, I don't want to be scrambling through trying to figure out, heck, what is the right support resistance level or fib level. So that's what this is. I've mentioned this before in my earlier archives. You can always go back there on that link that Dime has posted up above on fxstreet.com and check it out. All right, let's get started. So first things first, pound US. So really what's, in my opinion, what's really driving the market right now, if I had to pick top three, or really the top one thing, is what's happening to Greece. Don't want to go through too much details, but there's a lot of back and forth happening. Papademos, the Greek Prime Minister, I really sympathize with him. Poor guy, he's in a real fix. But I really admire his negotiating abilities. I can just imagine what this guy is going through. Between the Troika, the IMF, EU, and the ECB, their demands, versus the other three political parties in Greece and their issues. And I think the elections are coming up in April. So, I mean, it's dirty, it's messy, it's chaotic. Bottom line is, in order for euro US dollar to continue its upward stride, which I don't think will happen for a very long time because Italy and others will follow. But in order for it to continue its upward stride or not drop like a rock, that deal has to come through. So they have a 14.5 billion debt payment coming on March 20th. It's coming due. I believe the deadline in the sand is February 13th. As you can see, today is already 8th, so he doesn't have much time. And the reason it's February 13th, guys, is because that's the amount of time it takes from, I guess, the morning of February 14th to March 20th to go through the contracts and look at the different clauses and do whatever. So all the paperwork that needs to be done, the timeline required for that is February 14th to March 20th in order for the TRIOC or the IMF or the ECB who was funding that 14.5 and the overall 130 billion of debt to go through. So there are a lot of conditions behind that. Bring the debt to GDP down to 120% in 2020. I believe the private sector investors, they've agreed to the 70% haircut, which was they were initially having issues around 50%. This is going like 4 months back. Then it came to 60, and then now it's, I think, 70%. They're taking a huge cut on the interest rate down to 3.5 on an average basis for the 30-year period. So all that is happening, but on the side, the concern is now, this is where the concern is from what I'm reading. The concern is that the austerity measures. So pay cuts, downsizing the government, I believe increasing taxes. So everything that the Greek government has to do to reduce spending, massive spending, right? Now that also has a downside, and that's why I said just because the three political parties will agree to an austerity, if they do, which there's a 50-50 chance right now. But if they agree to an austerity measures and if they stick to it, that essentially will lead to a decline in growth, because general growth, increase in GDP requires the nation to spend. So if you're cutting jobs, you kind of, so my point here is over a short period of time, if the deal goes through over a short period of time, I don't know if it's a week or a month, the euro may continue to climb, and I very much doubt that, by the way. And I doubt that because as soon as Greece fiasco is over, I strongly believe that the next chip to fall or the focus to go to will be Portugal, and from simultaneously with Portugal, it's Italy. And the amount of money in EFSF and ESM and IMF, and if you combine all that, it's not enough to just bail out Italy's debt alone. And so there's also Spain. So it's a whole issues, right? So coming back full circle, I think the one thing that's going to affect pound, Mark, is what happens to Greece in the very short term, over the next 24 hours, 48 hours, to 2 to 3 days up to February 13th. And if that doesn't go through, I have a strong feeling. And guys, whatever we discuss in class, if you're a beginner especially, you have to please trade this in a demo account. Trading live is very risky, and if you do so, you do it at your own risk. But the point here is, whatever happens to euro would happen to pound, and would happen to Aussie and Kiwi as well. And I say whatever happens, I mean a significant drop, right? Okay, what's the question here? What is the worst consequence of Greece goes default? If Greece goes default, let me open up a clean chart. If Greece goes default, that's a good question. Sorry, Mark, I'll come back to your plan in just a second, but this is something that people need to get a good grip on. If Greece goes default, my take on this is you would see, and I can't predict over what period of time, but something like this can happen. Maybe this is a little exaggeration. These three candles, see this is a monthly chart. This is probably a little bit of an over-exaggeration, but definitely you see this candle, especially this candle. This was November. This candle here is November 2010, and I believe this was I think this was the Portugal crisis that happened. These candles here, these candles here from December 2009 to, that's an interesting point actually, this December 2009 all the way down to June 2010, a lot of this was Greece. A lot of this was Greece, guys. Okay, and I've done this in one of the classes before. So to answer your question, Solman, in my view, if the Greece bailout doesn't go through, I think there'll be massive panic. I think there's a lot of people wanting to go short. I think definitely one of the first things will happen will break this, or will hit or break this, 26, 22. Now keep in mind, this is how, if you can manage to get in short, this is how you make your 500,000 pips very quickly. Of course, we don't know the future. So the idea is to try and get in my opinion, this is what I try and do every day almost. Try and get in at nice levels, and if it takes me out, that's fine. I try and move my stop loss very quickly, make it safe. The idea is to make it safe. The idea is not to lose money. That's your number one rule, not to lose money. So try and make it safe as quickly as possible. That is not scalping. That is trying to make it safe, and then ride it as much as you can. So one of the first things that would happen is it would try and breach the support level 26, 22, and in my opinion, if things really don't come through, so China, on the other hand, you'll hear they're I think China does a lot of talk, based on what I understand, more talk than action. But again, that talk also has impact. Just considering the amount of reserves, I think there was like $3 trillion worth of reserves, a lot of money to throw in the face. And I think it was yesterday I read they were willing to put up 100 billion, either dollars or euros, I don't recall, but about 100 billion into the EFSF. So that also has, I think the recent spike that's happened on the euro is a cause of that as well. Plus the news that comes out about the Greece being closer to signing a deal and all that stuff, but still it's not in the pocket. I wouldn't consider it. Okay. So that being said, let's get on with the plan. I've got, it's about 7:15, so I should be quick. Mark, I did have a chance to quickly go through your plan. It's very comprehensive. Kudos to you. And guys, for those of you who, especially if you're new, I would strongly recommend that you go through this trade plan, see where Mark is coming from. You should take this trade plan and tear it apart, meaning honestly spend 4 or 5 hours. And if you're new, you'll spend that kind of time and try and understand what the heck is Mark talking about, why is he doing this? And again, you can go with this archive and see whatever I have to share, 2 cents. Okay, so I'll start kind of almost reading through his plan and see if I can add my 2 bits. No worries, Mark. Oh, your stop loss meant to be, and that's what I thought, 57.53. It's I thought that it was 100 pips. So I've changed that, Mark. That's great. Thanks. Okay, so the exit trade summary. The pair has a strong history of oscillating, has had a strong short uptrend. So oscillating, yep, I can see. So I'm looking at the monthly overall. It's oscillating sideways. Has had a strong short uptrend with 14 green daily candles. So let's go down to the daily. He's looking at the daily at this point. Yep, 14 very nice candles, very strong candles. Are we due for a pullback? Mark, I would think so. And again, it has to be driven by what's happening in Greece and what's happening in with that debt plan, solving debt crisis down there. However, we have 3 lower highs on weekly. Okay, so let's go and check the weekly. And guys, if you're following along later, this is exactly how you should do it. You should read what he's writing here and go on your chart and see what he's talking about. However, we have 3 lower highs on the weekly. Yep. So Mark's talking about this, I believe, 3 lower highs on the weekly since April 2011. Beautiful, Mark. So you know, Mark, what I'm gonna do? I think what I'm gonna do is start drawing some lines, trend lines. I think this is interesting. So I actually start picking up this just to visually show, especially those who are new. So if you start drawing, pick up the tops, this is what Mark's talking about. Don't you see a downtrend? This is on a weekly chart. Since April 2011, so he picked it up from here. Nice. We are in the middle of its predominant range of 6,200 to 5,300. So let's draw some lines and see where he's picking those numbers up from. 6,200 to 6,200 and 5,300. I think Mark has just averaged out those numbers. I mean, he's looking at it at a very high level, and it's fine. If you had to pick precise, he would probably pick up 52, 32, and but he's just rounding off these numbers at 62 and 53. That's fine. The big influence will be the asset purchase number. A higher purchase number will see pound decrease, and I would completely agree with you. Mark, if you don't mind, I'll just take a quick minute. Say minute, it'll probably take two to explain. So, okay, guys, central bank, and I think the class before or the one before that, I went through the concept of inflation, growth, and interest rates, and now these are three interrelated. So very quickly, all the central banks, not just the Fed or the ECB, but Bank of England, RBA, whatnot, their focus is on inflation, to control inflation, and the way you control inflation is through interest rates, and growth is not something you can control, but it's an after effect. But really, interest rate is one of your factors. If inflation is above the benchmark rate, you would increase, not like you would increase the interest rate. I'm sorry, let me step back. If your inflation is above the benchmark rate, which I think in England's, UK's case it is, the benchmark is about 2 to 3, and it's above 3. I think it's 4 or something like that. You would like to increase the interest rate, because if you increase the interest rate, corporations, they stop borrowing. If they stop borrowing, it reduces growth. If it reduces growth, it reduces your GDP. Hence, the economy cools down. If it cools down, it brings the inflation down. Now, that's the theory. It doesn't always happen that way, because there are other forces that come into play, and there's also a lag effect, a delay effect. But the other side of the story is the asset purchase. Now, this asset purchase simply is, so over time, central banks and governments, I guess, they issue bonds, whether it's treasury bills or gilts, as in the UK, but they issue bonds to finance their programs, government programs and spendings and building roads and roads and whatever. What's happening since the 2008 crisis actually is the government is buying back those bonds. Now, it's buying back those bonds simply to flood the market with cash, with money. So the idea is to increase liquidity. Now, when I say market, it basically, the central bank floods, or rather gives this money to the commercial banks. So I'm talking the city banks, the Bank of Americas, the Lloyds of the world. And the idea and the hope is, that as central banks, what they do is they buy these, so that's what asset purchase means. So they buy off the treasury bills, the gilts, the bonds, the whatever, as much as available from these commercial banks, and in return for cash. So they print the money, and that's how the term printing comes from. So to start their printing press, they almost print the money out of nowhere, out of thin air, because there's no gold reserve, which actually creates inflation, which is why your gold would go up the more you print money. They print that money and start buying those bonds from commercial banks in the hope that now, since the commercial banks have a lot of money, they will be more willing to lend it out to the corporates and the individuals. So, but that doesn't always happen. It didn't happen in 2008, and it's probably not even happening now, because the banks start hoarding that cash, and because they don't particularly take the risk on the corporates and not willing to take a risk in a risky environment. Anyways, too much detail, but the point here, the short and sweet of this is, the more printing presses run, essentially the more the central banks print money to buy the assets, and the more aggressively you do that, it creates inflation, and B, it ends up reducing your exchange rate. So there's more supply of money, there's less growth, so less demand. So essentially, more money chasing less goods will result in devaluation of your currency. Your exchange rate should come down, and that's, I believe, what Mark is talking about. The big influence will be the asset purchase number. A higher purchase number will see pound decrease. Okay, so should keep an eye on that. Okay, that definitely took more than 1 minute. I'm sorry. Okay, so Mark's looking at 5803. Let's look at 5803. I'll just put a number there, line there, 5803 now. So if he's buying, I would try and put that as green or lighter green so we can see the shade properly. And I'll put it really thick so I understand where the number is coming from. So Mark's looking at buying at 5803. You're looking at buying, right? Long, yep. And then he's also saying if asset purchase is normal. So with all the reasons I mentioned earlier. I'll come back on the, while I'm on it, let's pull up some Excel and just do a quick math. So this is for people to understand. So how to calculate lots. Okay, let me just bear with me. So this is lots. This is profit, entry, exit, profit. So the first lot, second lot, and so this is again for the benefit of simplicity. I suggested rather than trying to figure out where should be an entry price. I want to know that, but rather than figuring out should I go for 27 pips or 64 pips, just make it simple and put 50 for now in class, and then as you get more astute at trading, understanding where your support resistance levels lie and whatnot, you can start changing those numbers. So 5870 is his first take profit. 56,000 is his second take profit. 63.303. I really don't know if it'll go that long, Mark, but definitely that's part of your trade plan. Okay, so 60. So that's how. Okay, so you see. Yeah, so he initially Mark had I think 5703. That's why I think it's a little bit off, Mark, if I'm not mistaken. Your first number though. Your next one is fine. But anyways, entry at 5803 and exit at 6303 would give him 500 pips. That's what he's looking at versus 300. Second one is the correct 197 mark, and the third one would be 67 versus 84. Since you're looking at a 50 pip stop loss, is it a 50 pip that you're considering? So sorry, 5803 minus 5753. Yeah, you're looking at 50 pips. So 50 pip stop loss times 3 lots is 150, right? So if his plan went through, and I hope it does, if his plan went through, the total pips he would make is 764, and risk 150 pips to get that based on this plan. So the math would be, it would be a 1 to 5 risk reward ratio. So Mark, your risk reward in this case, the way I see it would be 1 to 5, not 1 to 3.8. It's 150 versus 764. So I hope I got that right. If I didn't, then let me know. Okay. All right, let's go back to the plan and continue. Now, okay, so let's go. Before I go on the monthly charts, Mark, maybe what I should do is just do a little bit of a trend review with the folks here, because you showed these three. There's a weekly chart and declining tops. But if you start seeing, if I start pulling this together, you see what's happening? You see what's happening? So I look at my trend lines. Oops, I don't want that. I'll start drawing some lines here. See, this is again a downtrend. This is also a downtrend. This is also a downtrend right here and right here, right? So this is a weekly chart. If you follow this gray line, do you see downside? Bearish, right? So it's been extremely bearish in 2008 subprime crisis. Since then, almost all the currencies and the stock market picked up. This is March 2009, right? So that's kind of, you can see it across the board, and equities and Euro USDs and Aussies and Kiwis from March 2009, they all went long. And then almost from there, it's on a weekly or monthly, it's kind of going sideways. Now that being said, as Mark pointed out, it's resuming, or it's still in its bearish cycle. Now, it's in its bearish cycle, and for the last 4 weeks, it's been an uptrend, right? Now, I'm not even talking about fibs and support resistance levels right now, but as you start seeing that and lining that together, you will see some fantastic things happening. Now, just an idea here, this low is 59.35, and so far it's gone till 59.27. So that's one resistance it's looking at. Anyways, just wanted to put that out there before I go into your further details. Okay, so monthly charts, the pair has had, let me go on the monthly. So the pair has had 2 powerful, fast downtrends. In 1992, the pair devalued 6,000. Wow, Mark. So see, this is what I like about a trade plan. When you're looking at a currency plan, you, as far as back as you can go, you really want to analyze it inside out, and that's why I said this is a very comprehensive trade plan. Back in 92, paid is 6,000 pips in 7 months. Now, I don't think FXE has beyond, well, it's only till 93, but I think Think or Swim has, by the way, this is also good software. I use this to give me a nice little overview. These are all daily charts I set up. And the way I set it up is these are up here are all euros. Down here is the other US majors. Then below I've got the yens, and then I've got the other parallel inverse pairs, Aussie Swissy, Kiwi Swissy, Pound Swissy, the Swiss pairs. And I've got my Aussie Kiwi here. So that kind of gives me a good idea of where the market is and what's happening and whatnot at a glance. I got the same for like so there's a daily chart. I've got the same for a monthly. If I did monthly, put up this on a monthly basis. And I have the same for a 5 minute. So 5 minutes would give me like probably 3 or 5 days data. It's good enough for me to take a quick look at what's happening. So let me open up pound. I don't think you can see the entire chart. That's fine, but or for recording purposes, for those in class, I'm sure you can see it. So if I go and select my daily, go down to 20 years and do the monthly, I should be able to. Yeah, right there. So this is the drop that Mark is talking about from this 2.01. Isn't this interesting? See this level? If you look at the high lows here, you'll see the number precisely. The high here is 2.01 something, 115, and it almost touched it there and dropped. Anyways, from here to here, that's the 6,000 pips that Mark is talking about, and the second drop was from 2.116 all the way down to 35.02. So let me pull up this plan again and go back on. So that's the two drops he's talking about, just showing the potential of how much it can drop. The appreciation of that is, so why has he done that? He's in my opinion, has done that to get a better appreciation of how much can it drop if and when it starts dropping. So, you know, we talk about the next big thing is the sovereign debt crisis. So when the sovereign debt crisis comes back into play, and US is your safe haven, is your primary dominant safe haven, with the Swiss National Bank pegging Euro Swissy at 1.2 and I don't recall his exact name, Schwarka, or one of the Bank of Japan governor coming up with threats every other day, every other week. I'm watching. So the yen and the Swiss kind of, I wouldn't say Swiss definitely is off the table as far as safe haven is concerned because of strong peg, unless the macro funds come and break the back of the Swiss National Bank, which I think at some point they will, quite frankly. I think they will. I think the 1.2 peg will break, by the way, Euro Swiss. There's only so much Swiss National Bank can do. If the sovereign debt crisis really bursts and Euro Swiss starts tanking, there's only so much they can do to support that peg, in my opinion. Anyway, so dollar is the dominant. Can you guys hear me okay? I hope you guys can hear me okay. I'm getting a little chat on the side that my sound's not coming in. Okay, thanks, Jimmy. Okay, let's move on. The pair has done one good uptrend, so from 36 in June 2001, so Mark's picking up this one right here, awesome. 2007, yep, so this is the trend Mark's talking about, and just to show it visually again, from here to here is a nice good uptrend, point taken. Post GFC, the pair has been oscillating. Mark, what's GFC? If you can let me know, what does GFC stand for? The pair has been oscillating and failed to retrace 50% of its highs. The most price action is range bound between the 61.36 and 51.98. So that fib, I believe, if I understand correctly, is picking up from here somewhere. Global financial crisis, got it. Thanks. Okay, so 64. Is that the fib you're looking at, Mark, 61.36, or is it the other one? Are you looking at it from here somewhere? Yeah, I think that's the one Mark's looking at. That's the one Mark's looking at, I think. The high, 397. Is that the one, Mark? 397. Or was it right from the top? Because this one gives me 61.38 and you have 61.36. Got it. Thanks, Mark. And the low here is 3,500. 3,500. It is 3,500. Yeah, I got that right. And I prefer the red lines because that helps me a little bit focus better. So he's looking at, what he's saying is from this, yeah, that's fine. So we could pick it from the top, or it came down and spiked up and that kind of it then 5 years in front literally dropped. So he's looking at this top from 397 down below, and his point here is it's almost oscillating sideways in the more recent time frame. So this is a monthly chart. This is a monthly chart, and the monthly chart from October 2011 is almost going in this range. That's fine. Before it kind of tried to breach 38.2 until 50. Kind of here it couldn't break 50. It just couldn't break 50. So it's definitely to the downside. So the whole purpose of him doing that is this. This indicates a strong bearish bias, and I'll put that in bold and red. This indicates a strong bearish bias. So you can, Mark, I'm so glad you picked this up and went in so much detail, because it really helps people in class, and I hope it's helping you. So you can see this downward trend that we drew, this gray line, and then on a monthly basis it couldn't break 50 for the last few months or other weeks. It's kind of oscillating between 38 and 23.6. So all that tells Mark and us that it's in a strong bearish bias, and I would agree with Mark. And I mentioned about Greece and all that, so I don't want to repeat, but if that happens, I think it'll just fall. It'll just fall along with the euro. You see that there are lower tops. Okay, if history repeats the pair, oscillates for 10 years after the aggressive downtrend, the pair has currently oscillated for 3 years post global financial crisis. Beautiful, Mark. So he's talking about this. This is 3 years, folks. This is the last 3 years. Am I right? Yep. This is the last 3 years. It's going sideways, and I would agree with that. Okay, support resistance 70.46. How much time do I have? 39.40. So I have about 15 minutes. Till 7:55. Maybe we don't have any of the trade plans, right? I couldn't see any of the trade plans, so I have 15 minutes to finish this. So Mark, I may not go through everything, but I have a good sense of what you're doing. Let me before I come on if I had to trade the pound, I'd be looking to take it short. I'm sorry, I'm not very comfortable taking it long. Okay, and I'll go through a plan more detail. But if I had to take it, if I had to take it long, if I had to go with you and take it long, let me see where I would go. And this is just an opinion, Mark, and it doesn't have to come out right. You have to understand that. So Mark's looking at 5803, and I'll see later why he's coming from there. But I'll be looking more like, so I'm picking this low here, 5778. So I'll put a little line below that, 5778, and I'll put a little green line, not as thick. So if you can see this drop low, and you see these highs, 5779, this is below 5773. So 5770, I'd probably be a little bit more comfortable going long around here. Okay, 5891. So 5890, it's currently at 5891. Yep. And this would be what I'm talking about, by the way, would be the next 24 hours or so, one day. I would like if I went, because it's so far done 5927 to come down till 5800 or 5778. That's what about 125, 150 pips. And if I look at the pound, where's my, oops. If I look at my pounds, this on the left here is my ATR, daily ATR, average daily range. So 15 days, this is a simple 15 days average. Where's my pound USD. So see, pound USD on average is doing, 15 days is doing about 99 or 100 points. Yesterday it did 114. Now keep in mind that's kind of on a bullish basis, and for the last 14 days or so. So almost all of this 15 days is on a bullish basis, about 100 points, yesterday 114. If it drops, if the Greece crisis doesn't go through, I think it can go like 250, 300 points. So forget ATR or support levels also. But anyways, that's where's my chart? So that's what I'd be looking at, Mark. Now 5804, if you don't mind, if I cheat a little bit and go back to my Mark chart, since we're running short of time. So this is my chart. So this is where all the lines start coming handy. So let me just make sure. So I believe I updated this recently, but the one thing you, just so you know, if you're using Snapshot and FXCM and saving it, and you haven't checked this in a few days, one of the first things you want to do is go to any time frame, hourly, 5-minute, whatever, so it refreshes itself, and then go back to daily or monthly, whatever you're looking for, to make sure your lines are correct. So if I go back on the monthly, just to make sure all my lines are, it hasn't breached any levels. I think it's good now. Okay, let me go on the daily chart. Mark, just bear with me. I'm just looking at your 5803 very quickly and see where it's coming from. Oh, I see. Okay. See where you're doing. Okay. All right. 5808 is not a bad idea. Okay, and here's why. So Mark, tell me if I'm looking at this correctly. On a daily chart, this high is 6744. If I click, you see that level, 6744, and the low is 5232. So 38.2% of that is 5809. Now 38.2, guys, I mean, all levels are important, 38, 50, 50, 61, but 38.2 definitely a very strong one. So 5802, 5809, sorry, and then this pink one, if you look at this high, this candle high, 6152, which is this right here, or 65 rather, and this low, 61.8% is like bang on. It's 5808 or 5809. So remember, when one or two or more fibs coincide, and I'm not talking a fib of a 5-minute chart, I'm not talking a fib on an hourly chart. This is a daily chart. Now again, understand multiple time frames. So if I went into weekly, I would still see them. So these are strong numbers. Don't take, so just because I say it's daily, if it was the last 2 or 3 days, yeah, I mean, it would be daily, right? And you'd see it on an hourly as well. But if I say for the last 4, 5, 6 months, so this peak here is what, April 2011. So whether I pick it up from a weekly or I can go on a monthly as well, and I would still see them. See that? This one is probably not as obvious, the lower one, but look at the monthly one. You can see it, right? From this top to this low, 38.2 is 58.09. Very strong number. So Mark, I would agree with you on that one. I personally would be a little bit more comfortable taking at 57.78, just because it's past 38.2 and it's also lining up with a nice support resistance level that I mentioned earlier. That being said, there are many times I miss a trade, and it's one of those things. So Mark, is that the right price? Is that your basis that I'm looking at? This is because I'm running short of time and I don't want to. Is my basis correct? Is that what you're looking at? If I look at the daily, those two FIBs lining up, 58.08 or 58.09, is that why you're taking? Yep, beautiful, guys, and I hope I've demonstrated the importance of these lines. Support resistance and fib lines, and the fact that, so once again, it takes me at my level anywhere from 20 minutes, sometimes 15 but 20 minutes or so roughly to put all the lines together. I start from the monthly and go down to the daily quickly. If you're doing it for the first time, it will take you maybe an hour, hour and a half. And the beauty, guys, is again, if you're submitting your trade plans, for that you'll have to do something like this, so you can gradually start building your own repository. And the beauty is, once again, to show you, if I go into files, snapshots, I pick up any trade plan. So if I can pick up, I don't know, pound Aussie as an example. This is not something I look at very frequently, but right. But there you go. The line's already there. Now it could be a little outdated, which is why I would go back into a previous time frame and then go back onto daily or monthly, whatever. But if the pair hits a certain number and I'm in front of the computer, I'm not freaking out, and that's the important point here. Anyways, now let me get back to your plan and try and finish it off. Very comprehensive, very nicely done. So Mark, one suggestion I'd give you, and you'll see that as part of our task. So I don't know how much you've gone through syllabus as yet, on the 1000 club, but typically what Jeff recommends, and so do I, if you're dominant trend, and this comes to trade management and part of your risk management. So if your dominant trend in this case is to the downside, and I'm just throwing a number, let's say whatever your account size is and whatnot, but let's say if your normal trade was like 10 lots, if you were normally trading 10 lots, and so if this was a short trend and you were comfortable taking it short at 10 lots, if you're not as comfortable going long, you should definitely half it. So go at 50% of your regular size. So you would go at 5 lots or a little less than 5 lots also. Just because you're not comfortable in the dominant trend, in this case, it's to the downside. So just something for you to keep in mind. Okay, key support resistance levels. So Mark, I won't waste too much time at 77,000 right now, but resistance 67, sure. Support resistance. I'm sure all your numbers are correct. So far what I'm seeing is I like it. September retracement, okay, beautiful. Weekly chart, and Mark, I have to apologize. You spent a lot of time putting in these numbers. If I went through all these numbers, it would take me about 2 hours in class. But I would encourage people to look at Mark's trade plan once again and see his concept, his logic. For those of you who don't understand how to draw fibs, there you go. It's all in front of you. Figure out all his levels and why he's doing it, and you'll learn from this. Let me read your similar to monthly report. The pair has a fast downtrend. Yep, same thing. Since the global financial crisis, since then the pair has been trapped in the range. We went through that earlier. Has been a range. Down price action. Although price has been from 70.48 to 42.29. Most price action has been within 67.46. Yep, right there, 67, right there. And that's the fib he's looking at. Super. 67.46 to 5300. So the only slight change I'll make to that is 52.32. So you're probably averaging out, rounding your numbers, but 52.32 number. based on which you picked up the FIB, as mentioned earlier, 38.2% at 58.09, which is, or 58.03 is where you want to take it. I like it. Now the other thing keep in mind is that hundreds, so 5800, 5900, 5700, 5600, these are the psychological levels, and especially if it's like a 6000, 7000, 8000, these are the major psychological levels. So especially if a support resistance number or FIB number is a few pips above, so it would make good sense. The other thing, Mark, I noticed in your trade plan, so just, if I just printed this, if you entered at 58.03, it's 5 pips below 38.2, so I think that's not a bad idea. The only caution is Greece, and if that doesn't fall through, it'll just break and go like 200 points. It's just 3 pips above the psychological level 5800, and your stop loss 57.53. And I understand you based it on 50 pips standard that we have for this class, but nonetheless, 57.53 is below, still below. If I went on the daily, it is still below this level, 57.79. So this level is very important in my opinion at this point. So we scroll a little bit more. So this high, or rather this resistance turns support, and this support now turns, I guess, support. This low, oops, clicking it, 57.78 right there, this low, and this is almost touching. This is beautiful. So if you were to go short at or long 58.03 at 50% or 30% of your regular lot size, and keep a stop loss below 57.78, so 57.53, it may not be a bad idea, but please only do that in a demo account. Okay, so a lot of numbers, excellent work. Daily chart reading, similar to the weekly report, range bound, sure, blah, 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 pair broke 53, yep, so you mentioned that. There you go. It broke 53 in March, the downside, then broke 53. Price action has bounced. 4 times with a few head fakes. Price also respects our numbers, very jerky pair. I completely agree with you. 60-minute. Okay. 1 hour. We are 7:52, so I have a little bit of more time. Pair has been a strong uptrend since Jan 13th, the slight retracement of 36.2, 23.6. Again, price is strongly oscillating. Yep, you can see all that. But overall, so if you scroll and you see, there's January 13th right there, January 13th, and it's in an uptrend, but it's been a very strong uptrend actually, yes. But it's just following euro. If you go on the euro and you pick it up, that's almost what's happening to the euro. So I would beg to submit that right there. What am I looking at? Right there. See that, Mark? Actually, right there. That low there is January 13th, 11 in the morning, roughly 11 in the morning. And if you go here on an early chart, right there. January 13th, 11 in the morning. So it's really stalking the euro. Okay. So I just don't see how the Greece plan will fall through. It probably, I don't know. Let's see. So I'm a little bit cautious. That's the only caution there, guys. And Mark, you picked it up very nicely. Greek bailout fund, 14.5 billion due March. But then keep comment on the US rates, yeah, all that stuff. So yeah, asset purchase coming through. Higher number could see the pound decrease. Awesome. Awesome, awesome, awesome. The parallel inverse pairs is looking at its pound Aussie all-time low, pound Kiwi at its all-time low, pound yen encroaching all-time low. So this highlights a pound is on a massive downtrend and weakness. Superb. Let me put that again in bold, which is again where I'd be interested to take it short. So Mark, that's my suggestion. I hope that helped you. Superb trade plan. Please continue to send in. I would request others to send in their plans as well. Charles, where are you? I didn't see any plans from you today. Yeah. So if you have any questions, I'll be happy to take them now. We have about 2 minutes, I guess, 2 or 3 minutes. I'm done. Anyway, thanks for helping me out on the side. And let me know if there's any questions or thoughts or suggestions. Or did you find these guys helpful? Did you guys find this analysis helpful? Those who were in class today. Does this make a few bulbs go off? Yes, no, maybe. And another thing, Mark, on the site forexstreet.net, please continue to, so whichever way you go or whatever happens on the pound, feel free to comment under your trade plan, and I'll also keep an eye on it. And I would also suggest others do so. So it's not about being right or wrong, guys. It's about learning how to trade currencies. So I have to say this once again. If I can advise you one thing, is don't worry about being right or wrong. I don't. That's why I put myself on the spot, and I'm willing to say what's on my mind. So don't worry about being right or wrong. Be more concerned about learning the art of trading currencies. That's my closing thought. Okay, I'm done. Thanks, guys. Thanks, Adinda, Maud. We'll see you next week. Bye now.